Welcome back to The Luxury. Today we're diving into the top 5 altcoins set to explode after SEC ETF approvals in October 2025. This isn't just another crypto prediction. What's happening with the SEC and ETFs is a seismic shift, unlocking institutional money that's been waiting for regulated access. Bitcoin ETFs were just the beginning. Altcoin ETFs could create generational wealth as pension funds, hedge funds, and corporations finally get the green light. Crypto is about to move from a niche market to a mainstream financial pillar, and the growth potential is massive. I'll break down 5 altcoins with real fundamentals and robust ecosystems. No meme coins here. Getting in before ETF approval could be the most important investment decision of the decade. Smash that like button, and let's get started. First up is Ethereum, the blue chip of altcoins and the backbone of decentralized finance. Institutions won't gamble on obscure projects. They'll go for the established leader with the largest ecosystem. Ethereum powers DeFi, NFTs, and thousands of applications. Think of it as the decentralized computer of the digital world. The approval of an Ethereum ETF will make it easy for financial advisors to offer ETH exposure to clients, unlocking billions in institutional capital. Even a small allocation from pension funds could send ETH's price soaring due to supply shock. Ethereum's shift to proof-of-stake and its deflationary tokenomics make it even more attractive to big investors. Staking yields offer a native return, similar to dividends, which is a huge draw for funds. Ethereum's developer community and network effect create a powerful moat, attracting more projects and users. While smaller coins may offer higher percentage gains, Ethereum is the cornerstone of any serious crypto portfolio. The ETF approval is inevitable, and when it happens, ETH will be the primary beneficiary. Ignoring Ethereum now would be like ignoring Microsoft during the rise of the internet. It's the safest, most logical bet for institutions entering the altcoin market. The inflow of capital will lift the entire ecosystem, but ETH stands to gain the most. Ethereum's fundamentals, network, and institutional appeal make it the front door for Wall Street. If you want exposure to the next wave of crypto adoption, Ethereum is non-negotiable. Let's move on to a more aggressive pick. Number 2 is Solana, the high-growth challenger that's overcome adversity and come out stronger. Solana's value lies in its blazing speed and low costs, handling up to 65,000 transactions per second, far outpacing Ethereum and even Visa. While it's faced network outages, Solana's team is actively improving stability with upgrades like Fire Dancer. Institutions see a project that's resilient and committed to long-term success. The Solana ecosystem is booming, attracting projects priced out of Ethereum and fostering real-world use cases like Helium and Render. Solana Pay enables instant, nearly free payments, with integrations from Visa and Shopify, a huge vote of confidence. Even meme coin mania has brought new users and stress-tested the network, proving its retail appeal. An ETF would position Solana as the high-performance alternative to Ethereum, the NASDAQ to Ethereum's NYSE. Investors looking for the next big thing after Ethereum will see Solana as the obvious choice. Solana survived a brutal bear market, FTX's collapse, and technical challenges, yet its developer activity and user base are soaring. The combination of speed, community, and corporate validation makes Solana a prime candidate for explosive growth post-ETF. If you want exposure to the next generation of blockchain applications, Solana is a must-watch. Third is Polygon, the Layer 2 solution turbocharging Ethereum's scalability. Polygon makes Ethereum faster and cheaper, enabling high-volume, low-cost transactions while benefiting from Ethereum's security. Its strategy is to enhance, not compete with, Ethereum, making it the go-to for brands entering Web3. Polygon's partnerships are unmatched. Starbucks, Disney, Nike, Reddit, and Meta all use Polygon for major initiatives. This real-world adoption is exactly what institutional investors want: tangible, de-risked growth. As more Fortune 500s enter Web3, Polygon is the enterprise-grade onboarding ramp. Polygon's evolution to Polygon 2.0 and its focus on zero-knowledge technology show it's building for the next decade. ZK rollups allow thousands of transactions to be bundled and secured on Ethereum, making Polygon a true scaling powerhouse. An ETF focused on infrastructure would almost certainly include Polygon, the picks and shovels play of the Ethereum ecosystem. The narrative is simple. Invest in the tech powering Web3 for global brands. ETF approval would validate Polygon's role and attract a wave of capital. Polygon's symbiotic relationship with Ethereum, enterprise partnerships, and tech innovation make it a top candidate for explosive growth. As Ethereum grows, so does the need for Polygon, putting MATIC in a strategic position post-ETF. Fourth is Chainlink, the decentralized Oracle network connecting blockchains to real-world data. Without Chainlink, smart contracts can't access off-chain information, making it the backbone of DeFi and beyond. Chainlink dominates the Oracle space, securing tens of billions in value and powering major DeFi protocols. Its network effect is massive. More integrations mean stronger data feeds, attracting even more projects. For institutions, Chainlink is essential infrastructure, like a utility company for Web3. Chainlink is expanding with the Cross-Chain Interoperability Protocol, CCIP, enabling seamless communication between blockchains. In a multi-chain future, CCIP could be the TCP/IP of blockchain, connecting everything. Chainlink is also leading in tokenizing real-world assets, working with giants like Swift and ANZ Bank. This traditional finance connection is a huge credibility boost for institutional investors. An ETF themed around Web3 infrastructure would have Chainlink at its core, a bet on the growth of the entire smart contract economy. Link's value is tied to network usage. Node operators must stake Link, creating direct demand as adoption grows. Investing in Chainlink is like investing in the data provider for the digital asset ecosystem. Its dominant position, vision for interoperability, and ties to traditional finance make it a prime candidate for a post-ETF surge. Rounding out the list is Avalanche, a high-performance platform built for enterprise and institutional adoption. Avalanche's secret weapon is its subnet architecture, custom, sovereign blockchains built on its platform. Enterprises can create their own blockchains with unique rules, benefiting from Avalanche's speed and security. This solves the noisy neighbor problem. Activity on one subnet doesn't clog the whole network. Major players like JP Morgan and Citi are already experimenting with Avalanche subnets for tokenized assets and forex trading. The gaming industry is also adopting Avalanche, with studios creating dedicated subnets for smooth, customizable game economies. Avalanche achieves sub-second transaction finality, a critical feature for financial applications. The subnet model is like AWS for blockchains. Businesses can spin up private chains, a model institutions understand. An ETF focused on enterprise blockchain solutions would feature Avalanche as a cornerstone. The AVAX token is central, it's used for fees and must be staked by validators, tying token value directly to network growth. As more subnets launch, more AVAX is locked up, reducing supply and boosting value. Avalanche's architecture, enterprise focus, and real-world adoption make it a formidable contender for the next wave of institutional capital. When ETF money seeks real-world use cases, Avalanche will be ready. There you have it. The top 5 altcoins primed for explosive growth after SEC ETF approvals. Ethereum, Solana, Polygon, Chainlink, and Avalanche. Each plays a critical role in Web3 and is positioned to attract massive institutional capital. Remember, this isn't financial advice. Crypto is volatile, so do your own research and invest responsibly. My goal is to give you a framework for where smart money might be heading. What do you think of these picks? Did I miss any altcoins set for a post-ETF boom? Let me know in the comments. If you found value, smash that like button, subscribe, and hit the notification bell for more deep dives. Thanks for watching. See you in the next video.